Jeremy Mckeown, welcome to the show.
Well, thanks, Paul and Tim. It's great to be here.
So, for the benefit of our listeners, would you care to provide us with a potted bio, a CV as such?
Sure. So I work as an investment consultant. I've worked in financial markets, in the buy side, but mainly on the sell side for, 35, 40 years. And I told people I retired in 2020 when I turned 60. And that's when I sort of launched I didn't really launch anything. I just started managing my own pension pot and my own ISA accounts, managing my own money rather than talking. I'd spent the previous 35 years talking to investment institutions about what they should be doing with their clients' money and trying to flog them the odd corporate transaction along the way. And I sort of sat down to the reality. I retired or stepped back from full-time employment the same month that the COVID lockdown started. So I had a lot of time to sort of ponder what I was going to do next, because the ideas of traveling the world and doing all those things on one's bucket list was sort of put on hold. Initially one thought for a few weeks, but turned out to be best part of a couple of years. So I had time to sort of sit and think about what I wanted to do. And one of the main things I had in the front of my mind, that if I wasn't going to have a sort of city salary coming into my bank account on a monthly basis, I'd better make sure I preserve the assets that I had, and principally my retirement assets in the form of my self-invested pension plan. So yeah, long story short is that I've been involved in the UK stock market, the domestic stock market, UK equities, and typically the smaller end of UK equities, dealing with AIM IPOs, fundraisings, and working alongside corporate brokers. But basically I was front of house. I was in institutional sales, so I was looking after a wide range of UK and some US and some European institutional fund managers, trying to interest them in a menu of ideas on a rinse and repeat basis. And got accustomed to the idea of, because most, as you're probably fully aware, that on the buy side, most investors gave up picking up the phone about a decade and a half ago. You had to use other media, and principal one was trying to write interesting, informative and helpful emails. So one of the things that I started doing during lockdown, because I was missing the opportunity, I guess, to structure my thoughts in a coherent way, I started publishing articles, make blogs on LinkedIn, and then started my own blog. And then I realized that the other thing I was missing about the job I was doing was having a network and interacting on a regular basis with entrepreneurs and some investors, people who look at the world differently. So I launched my podcast in order to retain and hopefully regenerate the network of people I had in that area. So I launched a podcast about 3.5 years ago now, called In the Company of Mavericks, and I think we're on about episode 65. Sort of goes out at least once a month, sometimes twice a month. And the main purpose of that and the blog that I write, which is called Hypernormal Times, is, as I say, to solve for what I missed about working full time. But I don't miss getting up at an unearthly hour and being at my desk in the city at 7 o'clock every morning.
So do you consider yourself, in the words of Elon Musk, the media now, or part of the media?
We all are, Tim. We all are the media now, aren't we? So no, I mean, I didn't, but I think it's very interesting the way the world is changing in terms of the bottom-up distillation of what is happening in our world, and not just from an investment perspective, but very much from an investment perspective. The world, I think, is sort of changing on its axis from what I think has become known as legacy media to citizen journalism, social media. And, I think we just witnessed a pretty amazing turn of events in the US presidential election, which I think was largely, there was a lot of things going on, but one of the the media aspect of it was that it was an election won on by podcasts and memes as much as any, and I think that it demonstrated to a lot of people who were not willfully blind to it, but had been conditioned to be blind to what was going on in the media landscape, that we can't rely on centralized sources of information, particularly, I think, about our politics.
Are you familiar with the Brownstone Institute in the US?
Yeah, I do read their stuff, and they seem to be. I seem to sort of be on a Substack with. I seem to be a Substack subscriber to some of their contributors, so I've been led to it, but I'm not familiar with its genesis or who actually runs it. But yeah, I am. Yeah,
because one of the reasons I ask is that Jeffrey Tucker, who's the founder. I follow him on Twitter or X, whatever one's supposed to call it these days, and he came out with the observation about a week ago that I really related to, and it was basically, I think the language he used was something along the lines of, it's like people are waking from a spell. And I remember thinking very vividly back in the dark days of sort of the early days of the COVID crisis that it was as if everybody had come under some kind of spell, but now people are finally, in 2024, people are starting to wake up from it. And I wonder whether, or I posit as a hypothesis that it's not just the mainstream legacy media that's been revealed to be, let's say, swimming naked, but actually big everything has been revealed to be hopelessly corrupted. As financial people, we would have observed this in 2007, 2008. But the thing, I'm pretty slow to, for the penny to drop. And what struck me in more recent times, particularly in relation to COVID, is that actually everything has been corrupted. So it's not just Wall Street, but it's big tech, big pharma, big media, big food, pretty much whatever sort of part of the economy you want to look at, or whatever part of the establishment, they're all hopelessly corrupted. And ideally, what the re-election of Trump and the election of Milei represent is maybe the first dominoes finally starting to fall, and good riddance to the ones that go.
Yes, yeah, I think there's a lot in there, but I think that COVID, I think this revelation that you refer to, and I think it is for many people a revelation, that we have been misled, if not lied to, by some previously unimpeachably correct institutions, goes back a long way. And I think that much of it goes back to the fact that that the world more generally on a sort of geopolitical basis is fracturing, and the institutions that were established post-World War II are fracturing, and that our politics, Western democracies, cannot cope with the speed at which some of these things are happening. But I do agree that COVID and the aftermath of COVID and the ongoing revelations of what actually happened. I mean, I regard myself to be a reawakened libertarian, and I look back at how, the way I was thinking about the world and how I reacted to some of the things that were going on during COVID, and I feel quite ashamed that I didn't stand up and make more noise about the way that populations were treated and the way that our liberties were curtailed at that time. But I think that a lot of what's going on, I think it's definitely the case, what's going on in the US with the re-election of Trump, and particularly the rise of RFK Jr. In sort of the fight back against the sort of healthcare lobby in the States and the pharmaceutical industry and big food, is all part and parcel of the sort of reflection on what actually happened, what we have allowed to happen to this world in the last 4 or 5 years.
Do you think there'll be any accountability to people who I would say, or I would state, not to suggest, but state, have basically committed crimes against humanity?
That I don't know. I mean, that's hard. But I think it's very interesting. I mean, we're talking a day or two after Biden has decided to, after all, to pardon his son Hunter.
For things he never apparently actually did, which is strange.
But he's not just been pardoned for things he's been already appeared in court for, which was possession of a firearm and drug-related offences, but he's been pardoned, importantly, for anything he may or may not have done in the past 10 years, from a starting point that coincides with the Orange Revolution and the downfall of Yanukovych in Ukraine, and what makes one very suspicious about the potential for Biden family interests to have been protected over this period and indeed ongoing. I mean, one has to wonder why Biden seems to want to have escalated the conflict in Ukraine after a pretty decisive mandate being delivered to a candidate who said he wants to pursue peace in that region. Now, obviously there's the issue of whether one can face or stomach being branded pro-Putin in all this, and I don't have one has to sort of step back and rise above it at times, but I do think that this tit for tat between and the Hunter Biden pardon is probably part of a wider picture of sort of scene setting for the next 4 years, where Trump definitely wants to get his man or his men in the key roles of heading the FBI, heading the CIA, heading the NSA, being in charge of the DOJ. I mean, how that plays out is going to determine who actually gets prosecuted, who goes to jail, and what the tit for tat is. But yeah, I think it could get quite ugly. But I think from a financial markets perspective, whatever you think of the prospect of Trump, of another Trump term, we got a decisive result, and the US has, in so many ways, I think since the shooting in Butler, the US has escaped the worst of, so far at least, yes, I think has escaped from the worst of the social unrest risks that would have accompanied. Well, just think if that shot had been slightly on target rather than slightly off target, and also just think if it was a very Trump had lost the popular vote but just won the collegiate vote, or vice versa.
In the preparation for this discussion, you sent over some links that we'll incorporate in the show notes, some pieces that you've written. The common thread, I think, across all of them was, would it be fair to say that you're a hard money advocate?
Yeah. So I did an economics degree, and I studied in the US, and it was in the late 70s, early 80s, where the UK and most of academic economics in this country and in Europe was Keynesian. And I studied under a couple of professors at Georgia State University who were Chicago School economists, and a couple also who had strong links to the Austrian School of Economics. So I had a pretty early taster of what the economics of liberty is all about, which includes the works of people like Menger, Mises, and Hayek, and a study of economic history, and also a study of the history of economic thought, which I sort of very late, almost quite recently discovered, are not things that are taught in if you do an economics degree in the UK. So yeah, I said earlier that I regard myself as a sort of silent libertarian, a latent libertarian. I had these ideas, including the history of, including the work of Mises and other Austrian economists who are hard money theorists, around what actually money, and as a result of which I had a broader than what is generally accepted to be understanding. I don't say it's better or worse, but just an understanding that money can be many different things. It doesn't have to be government-issued fiat currency. And for a lot of the last, 30-odd years, didn't really make much difference, because we were in a pretty unusual, I think, in the sort of broader historical context, but, distinctive financial markets framework. And a lot of we talk about the reasons for that. But I think the understanding of what money is, and in what has been referred to as inside and outside money, fiat currency and other forms of money, is all of a sudden in the last 4 or 5 years become much more apparent to a wider number of people, whether you're a gold bug or a Bitcoiner. These are important concepts to try and understand. And, I've made the comparison to David Foster Wallace's brilliant parable of the two young fishes. And I know other people have used the same parable, and I think it's very pertinent to understanding how financial markets and how people generally think about money. And it's like the two young fish swimming along, and they pass an older fish going in the other direction, and the older fish says to them, "Morning, boys, how's the water?" And the two young fish swim on and go, "What the hell's water?" And I think that older man for me is Hayek. He was talking about the problems of the monopoly issuance of currency and the advantages of competing currencies back in the 1970s. Now, our politicians in the 1970s chose to go with Milton Friedman's much more centrist, monetarist approach around monetary theory, which centered upon government monopoly issuance of money and the controlling of monetary aggregates, which was a improvement, I think, on the prior policy regime, which was purely Keynesian. But I think it fell short of the Hayekian model, which was considered far too radical for 90% of economists to even consider, probably 99% of economists to even consider, which I think has become much more pertinent today. And I think is, you mentioned the Milei government in Argentina. I mean, his idea of alternative monetary systems and competing currencies was to say central plank of his presidential campaign just over a year ago was to dollarize the economy. And that the dollar might not be a hard asset in the eyes of Western investors, but if your currency of choice is the peso, then it's a very hard form of money, and one that is I think the debate around what is money and understanding of what is money, I think, is increasingly important.
So you said at the top of the show that you used to advise funds how to invest, and predominantly you're looking at the UK market. What sort of techniques do you use and were these things that you learnt subsequent to your economics education?
In terms of techniques of selling to financial institutions?
No, in terms of making decisions about what to buy and how to buy it. In other words, do you use technical analysis? Do you use value investing or combinations thereof? So
in sell-side institutional firms there is a much higher division of labour than these things. So one of the really positive and energizing things about stepping away from doing that, working in on the sell side, has been to give me more freedom to develop exactly those sorts of ways of thinking about the market than I had previously. So in the jobs I was doing on the sell side for 30 odd years was much more pigeonholed into being the relationship manager for a big tier one institution like what is known today as BlackRock, which has changed shapes and names several times over the last 30 years. But these multi-trillion-dollar asset managers, having the job of managing the relationship with those investors mean that you're based as a front of house sales guy. You're effectively you're the maitre d' in a restaurant, or not even that. You're the waiter. You're the waiter at table saying, "What can I interest you in today? This is what I can offer you. We've got a good analyst who covers this sector. We've got a good analyst that covers that sector. We've got these corporate relationships. We know these companies. We can offer you corporate access to interesting management teams." But basically, it's one has to cut one's cloth, and I guess in that process, because I was front of house, I had to suppress in many ways my beliefs about how things should be done, because I was representing whoever the name over the door was. I ended my career working for Royal Bank of Canada Capital Markets, a sort of tier 2 global investment bank. And, I was well remunerated, but severely limited in how I could present myself and my ideas to my clients, because I had to fit in with what was best for Royal Bank of Scotland, Royal Bank of Canada Capital Markets. So, so this is why I found the last few years invigorating, because I've been able to go back to basics. And I wrote myself a short memo in 2020, which I titled "What I Have Learned About Investing." And I've just prior to chatting to you guys, I sort of revisited just to sort of check whether I'm sort of good to the 10 points that I made about the way I've been looking at investing, principally through managing my own money, but also dealing with, I've got a couple of retained clients in the city, and I sort of have interactions on a more ad hoc basis with probably half a dozen other institutional and family office type investors. So, I'm quite pleased with the with what I wrote down, and how they've at least stood the test of whatever it is for 4 years of time. But to get back to answering probably the question you were originally asking is, I'm not into technical analysis. I'm used to an environment of understanding equity valuations via fundamental investing. I think I've learned a lot in the last 4 years about the growth and value dichotomy of equity market investing. But I've also upped my game significantly in taking more of a helicopter view, a macro view of investing. And the first sort of point that I made, and this is back in May, I think, of 2020 when I wrote this, my first point of what I've learned from investing was get some real asset protection. And the first blog post I wrote was prepare for inflation. And this was immediately after the first response, monetary policy response to the pandemic, which I have to say that sort of assertion has stood the test of time for the last few years. And I don't personally actually think we're not out the other side of this cycle of inflation.
So what's actually on those, what's in the 10-point list, if you're willing to list them for us?
Okay, point 1 was get some real asset protection. Point 2 is that pricing power matters. Point 3 is innovation is difficult. 4 is that success is often oblique. I think I'll probably change that to nearly always oblique. The success you have is not as a result of determined action, but it's the way you adapt to the environment once you've gone along that path. And that is true of so many technical innovations, but it's true, I think, of human action generally. Point 5 is that data delivers advantage. Point 6, that skin in the game mitigates risk. Point 7 is you can't rely on mean reversion. Point 8 is that compounding is powerful. Point 9 is debt is dangerous. And point 10 is buy and hold.
Okay.
So I'm happy to talk about any of those points, but if further explanation is needed. But they might not make obvious sense to all listeners, but they make sense to me, and I'm quite happy with how I arrived at them and the way they've panned out.
Well, to jump in on one of those, debt is dangerous. Do you own any bonds personally?
No, I don't. And I do own, actually, I do own one short-dated UK gilt in an account for reasons I won't bore you with, but I regretted it almost the moment I bought it, and it sort of matures in a couple of months' time. So, no, I don't own any bonds, and I have reused several times your quote from when we last spoke, Tim, that bond investors are, I think, dancing around the edge of a live volcano.
A follow-up question: Does Scott Bessent fundamentally change the fixability or otherwise of a $36 trillion national debt in the US?
Good question. I don't know, but I think if anyone's got a chance of doing it, I think he would be in the sort of ones sort of pick the top 10 people in the world who might be able to do it.
A follow-up to the follow-up, does that change your outlook for gold?
Yeah, again, good question. Yes. And I think it's the combination of a man who needs, I've said it before, and I think it sort of is, without wishing to sound like a party political point, this is a Minister of Finance or a proposed nominated Minister of Finance of the world's largest economy that does not need to embellish his CV. He works hand in glove with the Doge twins, Musk and Vivek, in terms of seriously attacking the US government deficit. And I think that is, well, interested in your view, Tim, but I would say that you need to be aware that is a possible way the US government debt could become more attractive.
I suppose my take on these things, and we're obviously touching on a variety of different issues, is that the euphoria over the Trump re-election has now reached its stratospheric levels that it can't necessarily deliver on people's expectations of a shift to the right side of the ship. The ship of state will not so easily necessarily right itself given the power of the deep state behind the scenes. And I guess the other observation I'd make is that the US is not the only reason why those of us that do see merit in gold hold gold, because there are some global issues here, and the US is only one of them.
Yes, I think all that is true. Yeah, but markets look forward, and pricing is done at the margin, and one has to be alert to the sort of rate of change, or even the rate of change of the rate of change. And I remain coming back to
your interest in real assets remains.
Yes, and the real assets that I bought in 2020 were gold and Bitcoin, and I subsequently added silver and uranium, and I'm quite happy with that selection of real assets.
Well, you've mentioned the B word, so I will cede to Paul to continue on this topic.
Well, I was going to ask, what are you going to be looking out for in order to sell those assets?
I think it varies, doesn't it? One has to have an open mind and try and question for any asset that you own, you have to constantly question the premise and the reason you own those assets. And I think the easiest one for me to conceptualize at the moment is uranium, where I have taken profit. And the reason I've taken profit is that my original thesis was that the spot price at which uranium was trading was considerably below the economic cost of producing virgin U3O8 or yellowcake. And therefore, as the world renuclearizes, if that's a word, or re-embraces nuclear energy, which I think incidentally is inevitable and it's the only certainty around net zero, whenever that is achieved, and if we all regard net zero to be a desirable endpoint, the only certainty of that is we need more nuclear energy, and with current technology, the only way of achieving that is to consume more uranium. But uranium prices recovered. It reached over $100 a pound. It's now back in the low 80s, high 70s, which I think is probably at or possibly slightly now below the real cost of supply. So and I think also the other thing that's changed under Trump is drill baby drill. The more relevant, of more relevance is actually it should be pipe baby pike, because it's not necessarily oil that is going to change everything, but natural gas will. So one of the interesting outcomes of the Trump election is that the price of natural gas in the States has gone up significantly, which is slightly counterintuitive. But that means that the owners of natural gas are able to pipe and export their natural gas onto the world market, where the global price, we should be painfully aware of the European price for LNG, is still 3 times the sort of Henry Hub price in the US, and therefore this arbitrage is underway. Why am I mentioning all this in the context of uranium? Well, certainly from a US perspective, which is very energy hungry, particularly for its large data centers, gas can now resume its obvious place as the bridge fuel for between coal and oil and nuclear. So the maybe the uranium story is going to take longer to play out. So the other real assets, typically gold and Bitcoin, I have no current plans to do anything with either. I viewed my investment in both largely as insurance policy against global financial chaos and monetary debasement. And I think those risks may have reduced, but they certainly haven't gone away.
Right. So from the point of view of uranium, it was more that because you were suggesting that you were looking for an uptake in nuclear power as the way forward that many of us think is pretty obvious, that the only way out of the energy crisis is via nuclear energy, or potentially. We're not quite at that point yet, but the cost of it has fallen below. It was trading at a discount. It's now trading at a premium, and so that was how you got out of it. Is that fair?
Yeah, it was trading at a premium. I think it's probably trading in line with its cost of production. I mean, I think anything to do with energy resources and resources generally for, and I would distinguish these, uranium from monetary or precious metals, I'm a big subscriber to Julian Simon's ultimate theory of ultimate resource. The ultimate resource here, whether you're talking about any energy form and any naturally occurring thing, commodity, is the ultimate resource is human ingenuity and technology. The technology change and has meant that we are not constrained by the fact that at some level, oil, for example, is there is a finite amount of it. We have through human ingenuity become much more efficient of the way we use oil. We've also become much more efficient of the way we extract recoverable reserves from known reserves. And if you look at it in a pure economic sense, back in we have far more. There's a greater abundance of hydrocarbons in the world than there was in the 1970s, when the Sierra Club and the Limits to Growth and Paul Ehrlich were all saying that in this sort of Malthusian chant that we're all going to die through famine and pestilence because we're going to run out of these natural resources. Well, they couldn't have been more wrong. Yet their arguments have been resuscitated repeatedly over the period. So the reason I think as far as a competing energy source, one has to be mindful of the fact that technology changes quite quickly. And in the case of uranium, I mean, if we have credible evidence of fusion technology, then the value of uranium probably trends to zero. Yeah.
So that's obviously a product that you can value and say it's overbought or underpriced or whatever it might be. How would you do that with Bitcoin?
I don't know. How would you do it?
Well, I'm a technical analyst, so I look at the price and I look at sentiment. So but it also is suggestion that you're getting into something that you don't know how to get out of. Which is, I think, rule one. You have to know. How do you get out of something that you're getting in, and it might be that it's hit a price target, or it could be a number of things. I mean, there are, I suppose, ways that people value Bitcoin in terms of the network, and there are various energy and things like that. Yeah, and
I read a lot of the stuff that is out there.
So I was just curious. Sorry to cut in. I was just curious about the Bitcoin call, because when you said right at the beginning that you were buying hard assets, I didn't expect you to put Bitcoin in as a hard asset. To me, it's not necessarily a hard asset. It is definitely an asset that one could consider in that area, but not. I
think if I said hard assets, I probably meant to say real assets.
Okay.
I understand it's not hard in the sense if you've dropped on your toe, you can feel it. But I think it is a real hard asset in the sense that there will only ever be 21 million of them, and probably actually less than that because of a lot of these things. They'll only have. It is in that sense. I think there is a credible case that Bitcoin is the hardest asset known to man.
Okay, that's really interesting. I mean, I'm not disagreeing with any of your. I mean, it's not for me to disagree with your portfolio. I was just curious as to how does one differentiate between this is a really good price, which clearly uranium, you time that extremely well because it's corrected so greatly, to, actually, this has got another 500% to go, or and the same with Bitcoin. Is it going to hit 1 million and all the way up we're going to all be saying, oh, this is too high, or is it eventually going to go to zero and all the arguments about it being a real asset fade away? Because it's.
You remind me. I like Dominic Frisby's line on this. The Bitcoin's like the House of Lords. No one knows how it works, but everyone knows that it's expensive.
Good old Dominic. We have to have him back on the show.
I think so this is, you're in the realms here of saying what is the use value of Bitcoin.
Not really.
I know the use. The telephone networks have a use value. So the case I'd make, thing that sprung to my mind when you were talking about that as a knowing when to sell, is what is the value of a mobile phone network when Elon has got 20,000 low Earth orbit satellites and everyone can get Starlink direct to their phone? Well, I think he's on the journey now to disintermediate every mobile network on the planet. So what is the value of a mobile phone network? Well, it can become zero.
Yes.
Is that a risk?
Everything can.
What is the risk that Bitcoin goes to zero? I don't see it because it doesn't have a use case other than a monetary asset. Now, what is the chances that gold goes to zero? I'd say probably zero.
Yeah. So on Bitcoin, what could make it go to zero? Just to proffer some ideas, it could be a superior technology that is adopted, and it's seen as old hat, and people move off the network to this other technology potentially that does the job much better. It could be some form of problem that we haven't seen in the code. It could be a legal one where they attempt to ban it, or jurisdictions make owning it effectively outlawed by, say, very difficult financial rules in terms of holding it, or accounting rules. Could be that. I'm not saying any of those are going to happen, but I guess there's a possibility, even if it's small. But I'm more interested in as you're looking at the price and you have your fundamental view that hasn't actually changed, but the price is swinging hugely. How does that influence your decision to either buy more or view it as a correction, or decide to get out because it's gone too far?
So I bought Bitcoin, and I own the Bitcoin I bought 4 and a bit years ago off, in cold storage, and I haven't touched it, and I don't intend to touch it. 2 years ago, when we were in the crypto winter, I think it was called, I bought shares in a company called MicroStrategy.
Never heard of it. I'm joking.
And then in last year, when Bitcoin ETFs were launched, I bought earlier this year, after they were launched, I bought a small exposure in my pension plan into Bitcoin. So I hold Bitcoin in 3 different ways. In my own head, I think of those different ways differently. I would be prepared to trade the Bitcoin I own in derived form in an ETF and in the form of MicroStrategy. Whereas I just think of the Bitcoin that I have bought as my own reserve asset, insurance policy, probably something to hand on to my children and grandchildren.
That's really interesting. And do you look at any of the altcoins?
No.
No.
I think I'm what they call a maximalist, but I'm not a maximalist. I'm a Bitcoin only person, and I think the people like Lynn Alden, Preston Pish, Michael Saylor, Robert Breedlove, those sort of people who I've read and listened to are the people who took me down the proverbial rabbit hole. And I don't think that, to coin the Sailor meme, there is no second best. And I take your point that there could be a better technology, but I think these things that could happen. There could be we could yet find some form of wrinkle in the blockchain, but we're at 15 years in, and that hasn't come to light yet. So it's been resilient and adaptive enough as a network. And we've had many jurisdictions along the way try to outlaw and ban Bitcoin, and it hasn't. It's a network. It's come back stronger. I think, in the words of Taleb, it is anti-fragile. It gets after setbacks, it becomes stronger. And what do you know? We've got countries that are, nation states, admittedly, El Salvador, who have adopted it as legal tender, and many other emerging market economies who are very tolerant or encouraging of it, including Mr. Malay in Argentina.
We had a guest on. I'm just trying to find it whilst you were speaking, and he made a very good case. His surname's Howard. I can't remember his first name. I'm sorry. I'm going to have to put it in the show notes. But he made a very good case as to why Bitcoin is the only truly decentralized cryptocurrency. And I think it was on that episode that he discussed the predictive value of The Simpsons and how virtually everything they've said has come true. And there was an episode where it goes to infinity, where Bitcoin goes to infinity, and that would only happen if there's a total currency collapse. Enter Tim Price in this point. So I think that's quite an interesting point for discussion.
Well, I think Michael Saylor and MicroStrategy is a very divisive topic at the moment. A lot of people who I think are financially more astute, more savvy, better qualified, more analytical than I am will tell you that MicroStrategy is a Ponzi scheme, or it's Bitcoin's answer to the Hunt brothers who tried to corner the silver market back in the 1970s or 80s. Can't remember, one of the two. And that could be the case, but he's a man who he's got balls of steel, who's prepared to back his own judgment, and he's done a huge amount of research, and in his analysis and in the analysis of other people I follow, the Bitcoin is, more important than even that is that, sort of a practical point of view, in the US legal regulatory system, Bitcoin is a commodity. All other cryptocurrencies, I believe, bar none, are securities, which tells you everything you need to know, that they are not decentralized. So if you want to close down Bitcoin, who do you go and arrest?
Yeah, it's like trying to arrest somebody to shut down the internet. You can't. Yeah.
No. So I think the failure of Bitcoin will fail when the internet fails. And then I think we've got more problems than worrying about whether we have Bitcoin or not in the world.
Yes. So those were hard asset trades that you wanted to protect your money from. You said that you were UK focused. So what is it about the UK that makes you want to invest just here when there's clear outperformance from the US, for example, at the moment, and potentially from other areas in the world? But is it just because it's you know it better because you work for a Canadian company?
Yeah, but I've just been a specialist in it, and I think it's I think, Tim, you mentioned it when we chatted, that in your days as a bond salesman, the system I think you're spot on. The system professional investments, it drives you to a degree of specialization, which to the rational human being is the point of absurdity. Now, I was always, UK small cap equity person, and that's how I became badged, and that was my value to the system. And I think I was never really been, So like everyone in financial markets in the last 40 years, it's a great environment, a very privileged environment to work in. We were all paid well or overpaid, arguably. So to answer your question, the why UK equities, well, I'm afraid it's a bit like they're saying, to a man with a hammer, everything looks like a nail, and it's just what I'm familiar with. But yeah, I do invest outside the UK. Up until a couple of years ago, my biggest single stock investment, and the one I'd held probably the longest, was Google that became Alphabet. So yeah, I do understand that there is a bigger world out there in equities rather than just the UK equity market. I know one of the things I've been doing, and Tim's talked about how you protect the downside in equity investing through trend following. Now, I've never gone down that route myself, but I do know and feel confident I can invest behind fund managers who know how to do long-short equity well, whether that's in UK or globally. So probably along with real assets, in my pension, my sort of long-term capital portfolio, my biggest exposure is to various long-short equity strategies, both global, European and UK.
So are you looking at, when you say small cap UK equities, is that 250, 350, FTSE 250, FTSE 350, or even smaller than that?
Yeah, so even small. I think smaller companies for me start in the FTSE 250 and go down. Everyone has their own definition, but I think in the UK, obviously, I think smaller companies divide down into mid-cap companies, which I would say is the FTSE 250, small-cap companies, which are the tier below, and then you get down to micro-cap companies, which it's a moving target, but I think today probably resides certainly below 200 million. And one of my larger holdings in long-only UK equities is in a small micro-cap focused UK investment trust, which I helped set up within Dowgate, called Onward Opportunities Investment Trust, run by a guy called Lawrence Hulse. We launched it 2 years ago, and it invests solely in UK micro-cap companies, and it is proactive in the way it operates. So it is a Benjamin Graham, Warren Buffett style cigar butt approach to investing in the, how to put it politely, the detritus of the UK stock market, which we all know is being ignored by global investors for the best part of a decade now. Which has meant that the lower you get in the strata of UK equities, the more the price mechanism is dysfunctional. And when you get to the lower reaches below 50 million of market cap, of which there are still a very large number of companies listed, there is no price mechanism that's discernible at all. And the value that can accrue to someone or a team of people who focus just on that area of the market is remarkable. So in a period since we launched Onward Opportunities nearly 2 years ago now, that market has in aggregate gone down by 25%, let's say. Maybe it's less than that, maybe 20%. The Onward net asset value fund performance is 22%. And that is through just having a very focused, long-only portfolio of 15 to 20 names, the bulk of which are in the top 10 names, where stakes are taken a lot, and the investment is actively managed in conjunction with the other stakeholders in the company to deliver value.
But how are you breaking down your portfolio in terms of these micro companies compared to, say, 250 stocks?
Well, my micro cap exposure is in the form of Onward Opportunities Investment Trust, in which I sit on the investment committee. So I feel like got good insight into what's going on there and can have some input into it. I have a number of mid-cap companies, smaller mid-cap companies across some of the holdings I have. And I have exposure to, do I have an exposure? I have limited exposure to, a little bit of exposure to US equities. But my focus in the last 12, 18 months has been much more value type companies than growth companies.
So what's your outlook for the UK stock market in general?
I think we're past the worst. I think we're very cheap, and I think we're very cheap mainly because the global investors have, well, not just global investors, domestic UK investors have been uninterested to the point of actively selling and allocating capital deliberately away from UK equities for the best part of a decade, certainly since Brexit. And I think the reason for that is because of heightened uncertainty and a lack of structure in the UK for there being any natural buyer of last resort of this asset class. Unlike nearly every other domestic equity market globally, whether it's in the US, Canada, Australia, France, where there are structures and regulations in place that established institutional investors have to have certain percentages of allocation towards or particular categorization of investment vehicles that must invest a certain percentage of their capital domestically. The UK deliberately hasn't done that. And I'm not saying it's something the UK equity market should do, but it's a reason why in the last 25 years, these numbers aren't accurate, but approximately the average UK pension fund has gone from an allocation of UK equities of probably somewhere between 15 and 20% to below 5.
Oh, that's a brilliant contrary indicator. I'd like to. Where'd you get that data from?
I'll have to dig some out and send them to you. But yeah, I mean,
that'd be lovely.
Part of the issue here is that in that period, there's been various well-intentioned legislation, driven things like the Maxwell pension scandal, going way back decades, that have meant that pension fund trustees have been neutered by the risk mitigation. I was going to say risk mitigation Nazis, but I'm not sure I can say that. Compliance officers. The people who live in this world to make sure that we don't do things that we might regret, who, through no fault of their own, make life worse. And in this case, they have, and they've made life for listed UK companies far worse than they otherwise would be, because it's made their cost of capital much higher, and it's meant that we're being, and what's the test of this? Well, it's the rate at which these assets are being picked off by private equity funds and global strategic investors. And
that reminds me of one of my favourite quotes, which in relation to finance, which is the regulators are those people who wait until the battle's over and then waddle onto the battlefield and shoot the survivors.
Yes, yeah. It's bolting the stable doors. Yeah, fighting the last battle. But yeah,
for anyone who hasn't seen the documentary about Madoff, it's fascinating just because of how the regulators dealt with that whole situation, which is another story. But
this one, the biggest financial crisis in the last 3 or 5 years was a bank in California that overinvested in risk-free assets.
The
idea that Bitcoin or cryptocurrencies can, are a problem because they might destabilize the financial system sort of misses the point.
Yeah, it's typical, isn't it, for people who end up in charge who don't really understand markets. Understanding economics and understanding markets are two very different things. Which
I think is the brilliance of the selection of Scott Bessent as Treasury Secretary. But you've got a guy there who is
a poacher turned gamekeeper.
If he understands anything, he understands markets.
And so, sorry, Tim, I'm hogging the mic.
No worries.
could you be tempted to invest more in other parts of the world, as you seem to have more freedom now, and part of your methodology was due to you actually working within the sort of sphere of the UK market, but now you have the freedom to look elsewhere. Do you think that you will be widening your scope for these value stocks, or are you quite happy with the way things are working for you?
No, I'm always interested. I've been talking to. I've done a podcast interview with some emerging market people, and last month I spent 10 days in Buenos Aires because I'm just intrigued by what's going on there. I don't know if you saw. I mean, one thing I'm kicking myself about the Argentinian opportunity is I didn't act quicker and faster. I don't know when you became aware of what Javier Milei was up to, but I was reasonably aware of it, but became very aware of him when he did that brilliant speech to the World Economic Forum back in January, and made a note that, you know, the two places I wanted to visit at least one of the two places this year. One was Argentina, the other was Japan, because I think they're the most consequential places in the world right now. And I then, about 2 months ago, was watching a clip of him speaking to the United Nations, which again, and I just literally, while I was watching the YouTube clip, I booked my ticket. I got an Airbnb in Buenos Aires, and I went to Buenos Aires for 10 days. I contacted anyone I knew who might know anybody in Buenos Aires who had an axe to grind, who was an investor, a business owner, a financial markets guy. And I had 8 or 9 meetings with people, a wide variety of people in Buenos Aires in the early summer, enjoying some very nice steaks and drinking some nice red wine in a fantastic part of Buenos Aires, which was sort of the equivalent of Shoreditch, I suppose, and came back with my head full of excitement because the people I met were guarded, but they were very hopeful about this libertarian experiment that is just continuing to deliver. And, you know, the stock market's up 100%, since this guy's election, and bond yields, it's cost of it's various forms of peso exchange are starting to normalize. He's got inflation right down. The country risk premium has fallen sharply, and what do you know? 12 months on, he's more popular than when he was elected. So he hasn't done it yet, but
he's done a reverse Starmer.
He's done a reverse Starmer. That's a very good way of putting it. And then I come home. It's not stopped raining. It's cold. It's dark. It's miserable. And we've got some commies in charge.
So what was it for people who hadn't heard the speech? What was it that drove you to be so excited, and what have you found that means investing in Argentina has got some great opportunities?
Point one is he's not a politician. He's a reluctant politician. He's an economics professor. He worked 20 years in teaching economics in Argentina. He's published 50-odd academic papers. He's passionate about and talks passionately and eloquently and very sensibly about the works of particularly the Austrian economists. He's a big fan of Murray Rothbard, who is the father of anarcho-capitalism. And I think Milei has tempered his anarchic views. So he's moved from being an anarchist to being a minarchist in order to accept the real world practicalities of becoming a politician, which he has reluctantly done. He literally, when I spoke, the people I spoke to, all of whom were, switched on people with a vested interest in what was going on in Argentina. I don't think any of them claimed to have heard of him before March of 2023. He was a congressman, had been for just about a year. He had his own party that no one had ever heard of. And within 6 months of people becoming aware of him. And these are people who are, investors in, they have a vested interest in the Argentinian economy and country. And within 6 months of people first becoming aware of him, he became their president. And the way he did that and the way he has conducted himself throughout is exemplary. In terms of, he told the truth. He said it's going to be this, but he convinced people that he had the solution and probably the only workable solution to the problems that Argentina had at that time, and had, in various forms of the same problems for the best part of a century. And I think it's not a done deal yet by any means. I mean, there are risks, mainly political ones, but he can deliver on making Argentina the most capitalist country in the world. And anyone who knows anything about the history of Argentina, certainly since World War II, it has been far from that.
Yeah, so I'm just looking at a chart of the dollar Argentinian peso, and I know I've mentioned this a few times before, but this really does make the point. When Taleb was talking about Bitcoin being volatile and therefore it can't be a currency, in August 19, the US dollar against the peso was trading at 63. It's currently trading at 1,011, and it's been going down in a straight line, either very fast or in that direction. Part of why the stock market is up so much will be because the currency's weakened. So whether it's a real gain or whether it's just because of the destruction of the currency would be unclear. I'd say at those rates, it's probably not a gain at all. But
no, so what's happened? Where this time last year, there were 14 different exchange rates.
Okay.
There's now 2. There is not full convertibility. And interestingly, the most obvious thing about money in Argentina is that the peso, the local currency, of which the current version, you get 1,000 pesos to the dollar, round numbers, varies depending on whether you use the official rate or the blue or the red rate.
Oh,
and they are normalizing. They're narrowing. The spread between those two have normalized. They have, and such that you'll probably get full dollar convertibility sometime early next year. We'll see. But for the average Argentinian who's been through this many times in the last 20, 30 years, the peso is a currency to transact in. You buy your coffee, you pay your cab driver, whatever you do on a day-to-day basis, but you don't hold it. You save in dollars, and you save in dollar bills cash, because most people don't have access to a dollar-denominated bank account. Something like 20% of all the $100 bills in the world sit in safety deposit boxes in Argentina or under the mattress. So a word of advice, even now, although I think it is changing, go to Argentina and you want to get the best exchange rate, take $100 bills. Because you get a better exchange rate for a $100 bill than a $10 bill.
Right.
So if you buy a house or a car in Buenos Aires, you pay dollar bills cash. I was talking to a guy. He bought his current flat in the Knightsbridge of Buenos Aires. He paid $400,000 for it about 7 or 8 years ago, and he was buying it from the family of someone who, the estate of someone who died and passed on the flat to his 3 children. So he paid. He turned up on the day of completion with a lawyer, a security guard, and $400,000 in cash.
Wow.
They turned up. There were a lawyer, a security guy who had a cash counting machine, and there was the 3 of them. They counted out $400,000 in cash. They paid the lawyer, the security guy, and then they divvied up the rest 3 ways, and they all left. He said it was like a drug heist.
That's unbelievable. That's something from a movie, isn't it?
Yeah, and that is how large transactions take place in Argentina. The inefficiency is just horrendous, but no one trusts the peso. Now, what Milei has done is reestablishing trust in the currency, but he's definitely reestablished trust in the political process. His view of the world is that the political caste, as he calls them, are just criminals. Famously, part of his election campaign in his constituency in Buenos Aires, he raffled his monthly salary among his constituents because he said, this is the proceeds of organised crime and I'm returning it to you.
Wow.
So he is, I think he's a really interesting and important, potentially very important litmus test to the world on a libertarian future. And I think it is a future that, I don't know what the timescale is, that Europe will be facing in some period in the future, the way things are currently going.
I think we're there already.
Well, yeah. Yeah.
So tell me on a day-to-day basis, like the equivalent of what things cost with your dollars. So are things like ridiculously cheap for a tourist?
No, interestingly. And the reason for that is because the hot money's arrived. The easy money's there. The easy hot money has sort of made a return. And if you look at the Argentinian ETF or YPF, some of the US listed Argentinian names, we as Western outside investors can't invest on the domestic Argentinian market because of the exchange controls that are still in place. There are a small number of ADR listed, US listed Argentinian stocks. They've all gone up a lot in the last 12 months. And the biggest of them, I think, is YPF, which is New York listed. So the hot money has arrived in Buenos Aires. I didn't try, but I was told you can't book a 5-star hotel room in Buenos Aires. I did try and get a slightly more comfortable airline ticket to return than the stowage class that I travelled out on, and couldn't. They were, the business class tickets were fully booked. So I had to make do with the, whatever it is, premium economy. But I don't know if you listened to Stanley Druckenmiller was talking about his interest in Argentina, and he said he watched the Milei speech to the World Economic Forum earlier this year, and immediately after watching it, he got his people to do some digging around the 3 biggest Argentinian ETFs, and he bought all of them, like just after watching that speech. So the hot money is definitely there, and the hot money is not just in the market, but in the economy. So the locals were saying that things got expensive. And while I would say they're probably, I was staying in a nice part of Buenos Aires, which is nowhere near representative of the prices paid by locals in Argentina, I'm sure, but it was probably 2/3 London prices, I would say. So not cheap, but good value. Cost of an Uber was probably 1/3 of London prices, but Uber was working, which they were very proud of, because until earlier this year, Uber couldn't really properly operate, but now it does. So things like that are coming back. And I think if he can remain popular, and we've got some midterm elections coming up in October next year, if the odds are that he gets re-elected for a second term, then I think the long-term capital flows will start to come into Argentina. And the shale opportunity, the lithium opportunity, and of course the agricultural opportunity is huge.
That shows some commitment, jumping on a plane and going out there. That's fantastic. Have you got plans for anywhere else?
No, not at the moment. I'd said I'd like to go. I'd like to go back to Japan. I went to Japan 7 or 8 years ago. No, I just had this feeling. I think it was my, this inner libertarian that's trying to get out, and I felt I needed, certainly following the UK election back in July. I just felt I needed my inner libertarian needed some nourishment.
What a great place to go. Tim, was there anything else that you wanted to ask?
Nothing to add.
Okay, brilliant. Jeremy, was there anything that we haven't asked you that you wanted to mention on the show?
I don't think so, no.
Okay.
No, I've enjoyed the conversation. It's time has flown by.
It really has. I can't believe how quickly time's gone. So we'll go to media picks. Tim, do you want to kick us off?
Yeah, I've maybe already alluded to this one, but we nicely segued into by Jeremy just now. So for me, it's a book that I downloaded onto Kindle on Friday of last week and finished over the weekend. And it's Life After Lockdown by Jeffrey Tucker of the Brownstone Institute. So for anyone that is unfamiliar with Brownstone, they're basically a free market libertarian think tank that have been around for a few years. handful of years, set up by Jeffrey Tucker, who has a sort of solid Austrian school economic background. And I guess what I took from it, I think Life After Lockdown was published early this year, so it's one of the more recent books about the sort of the COVID so-called pandemic and the disastrous policy response there too. And I suppose the striking thing about it is it makes you it allows you to remember stuff that otherwise you'd either deliberately or inadvertently forgotten. People forget we've lived through the most extraordinary period the last 4 years. Things that you never thought would happen in a million years have happened by some of the most, what now turns out to be repressive governments and organizations that were previously on the side of good, which now show themselves to have been hopelessly compromised and probably terminally corrupted. It's not necessarily an uplifting read, but in the context of what's now happening politically, and again, Jeremy's alluded to what's happened in Argentina and what's potentially going to happen in the States, it actually does give you enormous cause for optimism. Either way, for people who perhaps have an interest in being reminded of just how insane the world became from March 2020, Life After Lockdown by Jeffrey Tucker, and it's a great read. He's a very good writer, and Brownstone is an institute that I think everyone should implicitly support.
Brilliant. Jeremy.
Sounds very interesting. I'll have to look that one up. One of the books I downloaded to read, or reread actually, because I did read it a few years ago, to sort of go back and dip into when I was on the 16-hour flight to Buenos Aires, was a book called Why Nations Fail. And one of the reasons I downloaded it was because clearly Argentina has failed a number of times in living memory. But also this year, the authors of this book, Darren, and I won't be able to pronounce his name.
Ashimoglu.
Thank you. Who's Turkish, of Turkish origin, I believe. So my Turkish sister-in-law tells me. And James Robinson, his name I can pronounce, were awarded the Nobel Prize for Economics this year, largely due to this work. And the thesis of the book is that
poor countries are poor because those who have power make choices that create poverty.
Exactly. Yeah, historical pattern. It's this historical pattern of extractive institutions and that keep poor countries poor. And I think in the case of Argentina, it was a very interesting book to accompany the trip to Argentina, because they really nailed the reasons why it has failed repeatedly for the best part of the century. These extractive institutions, and combined with political instability, which manifests itself in military coups and just very volatile and unstable social environment, just created and perpetuated uncertainty and periodic complete destructions of financial value that meant that it did not have access to global capital for a large part of its history. And, when Argentina was back 100 odd years ago, in the early part of the 20th century, Argentina was, considered a viable alternative to emigrate to the United States. It had huge opportunities, and people went there with great hope, and it just hasn't happened. It hasn't happened for totally self-imposed political reasons. So, I recommend it as a great read.
Fantastic. Just before I give you my pick, if there was a book that would most accurately reflect your method of analysing the market, so in other words, if somebody wanted to replicate what you're doing and they needed to read a book, what would be the closest book to it?
Oh, I don't know.
Or is it so difficult to define your ways of analysing the market?
I can think of a few books, particularly the name that comes to my mind is Taleb. I think
really?
The most influential book for me was Fooled by Randomness.
Yeah.
Which I think was a far better book than the subsequent book he wrote called The Black Swan. And I think Skin in the Game. So one of the things Skin in the Game, I think, is, as a philosophy, is a brilliant read.
Anti-Fragile is similar to that, isn't it?
Yeah.
But Fall by Randomness, okay, that's interesting. So, but that's not an analytical book per se. So what's closest to your? Would it be? You mentioned Ben Graham. Would it be one of his books as well?
I think Buffett and Graham. I've listened to so many people who are students of theirs. I feel like I've read all their books, but I haven't, or all the Berkshire Hathaway letters.
But Buffett, to be fair, now is not what Buffett was when he began anyway. So he
was corrupted by Munger, really, wasn't he?
Well, I mean, I think Munger was
in a good way,
underrated genius, but
definitely.
I think the major change, as I'm aware, for Buffett was he began with sort of Ben Graham inspired, last puff of cigar, cigar butt type deep value, and then over time morphed into what one might politely call quality value. But actually, one question, it's not specifically relative to this, but we didn't cover it, and now I realize we should have done, is to what extent do you think there's a likelihood there's going to be a crash in US markets over the next 12 months? Equity markets specifically and tech specifically. It seems very overripe to me, and I'm seeing a lot of sort of anecdotal examples of things that are so absurd that they're symptomatic of the conditions, say, that pertained in early 2000.
I think we're in an extended bull market for the US economy and its stock market. So I think the risks are greater, are increasing. And I think the long and variable lags, which I think could be longer this time round because of the extenuated nature of this cycle we're in, could mean that the market is collectively deceived to think that we're entering a soft landing. So I think, I have less exposure to US and no exposure to big US tech. So I'm talking my own book. But I think there is better value.
That's really fair, because that's re-endorsing the whole skin in the game principle, which is if you don't believe in something, then don't own it.
Sure. One exception to that that I do have exposure to indirectly through the Baillie Gifford Schahalian Fund is SpaceX, which I know today has just been, Bloomberg has got a story saying that it's doing a secondary offering of existing shares at a valuation of 350 billion, which I think is nearly twice or even more than twice the value it last did a fundraise at just over a year ago. And I think SpaceX is on the verge of becoming the Mag 8. But I think within that context, I think Elon is a special case for reasons we could probably have another podcast episode.
Sure.
But I think you seem to be leading the witness a bit with your question, and I would be prepared to be led in that direction, Tim.
When did you stop beating your wife?
Yeah.
So
my first wife or my second wife?
So with regard to SpaceX, just to clarify for me, are you saying that that's an indication that things have gone too far, or it's a special case?
I think it's a special case. I think, as I said earlier, I think, I think the next sort of leg of the SpaceX story would be an IPO of Starlink within SpaceX, which will crystallize value that will amaze people.
Well, if they disintermediate the phone networks, then it's 350 billion is cheap.
Yeah.
He's already disintermediated the traditional media, so who knows what this guy's capable of doing.
Amazing. So just to round things off from me, my pick is a non-financial documentary it's on Netflix. It's called Tell Me Who I Am, and it's the story of this is two brothers, and after losing his memory in an accident, Alex Lewis trusts his twin brother Marcus to tell him about his past. And so at 18, he had a motorcycle accident, and then, which was described early in the documentary. And as I was watching, I was thinking, well, where's this going to go? That's kind of interesting. And it sort of went off in a direction that I really didn't expect. And so, difficult watch in some places, quite emotional, just a heads up on that. But it was fascinating. And so Tell Me Who I Am, slightly off the beaten track. But Jeremy, look, thank you so much for coming on the show. We've covered a lot of ground and some really interesting stuff. Just before you go, if people wanted to get in contact with you, follow you, or learn what countries you're going to be heading off to in the future, how would they do that?
Probably best via Substack, which I've become a big fan of. And probably I should, when you said what media picks, I should have mentioned some of the great stuff that's on Substack, including obviously Tim's writings, but you can look me up I'm on Substack, and Jeremy Mckeown, spelt the Irish way, Mckeown, and my Substack is called Hypernormal Times and in the Company of Mavericks. And Hypernormal Times is my blog, and in the Company of Mavericks is my podcast. And you can listen to the podcast on all good, as with this one, on all good podcast apps.
Is that an homage to Adam Curtis, the Hypernormal?
It is, yes, hypernormalization. I mean, I think we are living in a world of hypernormalization, and I think that when I was casting around to try and find something slightly witty and hopefully off the wall, to call my blog, that's what I chose.
Excellent. Well, we'll definitely have to invite you back on to give us an update on your portfolios and on what you're thinking. Best of luck with everything, and look forward to having you back.
Thanks both. Enjoyed it.
Thanks, Jeremy.
Thank you. Thanks so much.
Cheers.
This podcast is for entertainment purposes only. Please do your own research or contact a professional advisor.